welcome back to the Behavioural Investor. It's been a little while. It's good to be back in 2021 and having survived 2020. We're busy dressing up in hunting gear at the US Congress, hanging out there. So just managed to get him out of prison. But he's going to talk about his investing projects and what he's been up to lately.
Yeah, well, I heard that there's a bunch of US politicians who are trading on their insider information, so I thought I'd go to the source, you know. I don't know how many of the other capital insurrectionists were there with the same goal, but, you know, that was why I was going through Nancy Pelosi's desk.
Yeah, where did you get that big bullhorn hat that you had on with the makeup as well? Where did you buy that?
Well, there's actually a surprising number of things you can get in Serbia. As I think I posted on Twitter, I managed to find a knife maker, a medieval, from a medieval festival at a castle. I met a knife maker, and yeah, there were a few other things for sale there.
So the guy just makes knives for a living?
Yeah, he's got, you know, Instagram account, Facebook page for his business, and he basically does it full time now.
Was it a whole bunch of different knives, like everything from knives you use in the kitchen through to hunting and ninja knives and stuff?
Yeah, everything from little pen knives, and I bought a few as Christmas gifts for my friends and my wife's friends in Serbia, up to hunting knives like crocodile Dundees. There were a couple that were basically daggers.
Yeah, okay, nice. Do you want to give his site a plug?
Yeah, we'll definitely put a link to it in the show notes. Yeah, recommend it. It's really nice to find someone who's like an old craft or art like that. And he's a cool guy, so yeah. And
he was supporting himself? Because I think this is an interesting topic. Most of us think that we need to be desk jockeys or become Wall Street analysts or entrepreneurs to be successful. But I mean, I guess you could call knife making an entrepreneurship, small business. But
I think maybe something was lost in translation, but he seemed to tell me that he had quit his job. I think he was a tradesman, and he was making knives and selling them full time. Yeah, I like it too. I mean, and he, like with websites like Etsy and Shopify, and you can sell stuff directly from Instagram. He's basically like the entire world is his marketplace.
Tell you what, it doesn't matter what your niche is or your interest. If you really do want to do it, you should be able to pursue it and make some sort of career out of it. I was talking to a guy at work the other day, and I said, "What did you do over the Christmas break?" And he said, "Oh, not much. They just sort of hang around the house and went swimming, those types of things." But then he said, he's got a sheepdog, and he took the sheepdog. And yeah, he just lives in suburban parts of this city. He took the sheepdog up to a farm that runs sheep herding training days. So you take the sheepdog, your city dog, and take it out to this farm that has sheep, and they teach it over a couple of hours how to herd, if that's the right term, herd sheep. He said, "Oh, it's fantastic. You know, it cost him $60 for an hour." I said, "Yeah, I'm running a business doing that." And he says, "Well, these guys do. They obviously get enough business and enough people coming up with their dogs, you know, either kelpies or sheepdogs, and they make a buck out of it."
Yeah, great. I'm just having a look. There's a medieval sort of reenactment society in Serbia called White Eagles Serbia.
That sounds a little bit the White Eagles.
Well, I was mentioning things that might be lost in translation.
That sounds like they're about to go on a pogrom or something. With all their knives they've made up.
I'm just on his page now. Yeah. Sasa Kusic. Sasa Kusic is his name.
And is that the name? What does that say? Noziv. You just moved it. But
it might be Sasha Kusic. Yeah, here we go.
So it's S-A-S-A is the first name, S-A-S-A, and then surname is K-U-S-I-C. K-U-S-I-C.
Yeah, that's the one.
Knives that look extremely dangerous.
Yeah, I remember holding one of these. I didn't buy one of those, but yeah.
If you're listening to this podcast and you're looking to buy a knife, don't buy one to cause harm to other people.
True. I need to open the door. Hang on. I'm back.
I see Sasso is also friends with one of the characters out of Lord of the Rings.
Yeah, it looks like it. Stands to reason. Here's his photos.
Which one's him? Okay.
This guy. Yeah, when I met him, he had this awesome hat, like is it a pelt rather than felt. It's literally like the fur of a cat, including the fur on the face, whiskers, ears, and all, with little holes where the eyes were on his face or on his head. So it's great.
We should also promote him on Twitter. I think we send that photo out.
This is a real man, like literally. What a guy! He's wearing basically everything but the guts of another animal on his head, and he makes his own knives and goes to medieval festivals in old castles on the Danube. I mean, that's awesome.
That's the type of photo that goes viral.
Well, I've got a photo with him wearing that hat.
Yeah. Okay. Wow. On other crazy things, Bitcoin's at $40,000 at the moment. I know that you're big on Bitcoin, or have been.
I was.
We remember the good old days of late 2017 when all these Bitcoin and cryptocurrency IPOs were coming out, and we were investigating them and watching people's YouTube presentations on their coins that they were developing and how it was going to revolutionize everything. But it's interesting, like if you had it kept, even if you bought at the peak back then, I think it got to a peak of what, 24,000 or something. It's still pretty good returns, 24,000 to 40 over a 3-year period.
That's right. Yeah. What did we do? We sold.
Yeah.
Can you see my screen now?
I can see the screen. So you've got Bitcoin. Then in the first column, then the second column, you've got cost, then you've got currency, what currency it's denominated in, converted, and exchange.
Yeah.
So let's talk about this. What do we see? So in the first column, can you just say what all those different numbers are, what they represent underneath? So Bitcoin.
Yeah, sure. So in column A, there's each of the transactions that I managed to extract basically from the email notifications from the 3 exchanges that I bought Bitcoin from in 2017 and 2018.
So is that the amount of Bitcoin you bought?
Yeah. So positive values is where I bought it, and negative values is where I sold it, basically for the purpose of converting it to Australian dollars to bring back into my bank account. Supposedly.
Just to be clear, you started off, you bought 0.14 of a Bitcoin, and then you bought 0.5 of a Bitcoin, and then another 0.5, then a 0.78, and so forth. Is that correct?
Yeah. Yep, that's right. And I've got in column B the cost in whatever currency it was. Column C is the currency, and column D I've converted it all to Australian dollars using the correct exchange rate at the time of the transaction. That's because when I started, I was in Kuwait, and there was this little, believe it or not, this enterprising Kuwaiti who'd set up an exchange called Bitfils, because fils is basically, you've got Kuwaiti dinars, which is like dollars, and fils, which is cents, paying fils for Bitcoins. But I definitely paid more than some fils. I paid, well, for the first time I did it was 400 Kuwaiti dinars, which at the time was 1,800 Australian dollars. That was my first transaction. Yeah, so, and I've got.
What was the maximum amount of Bitcoin you had at one point in time? It looks like it'd be about 3.
The total amount that I purchased was 5 or so, if you don't include the ones that I sold. So in the first column, and in column A and column D, positive values is where I purchased it. Negative values is where I sold it, so that I can put all in one column. I can calculate all in one column the total amount that went in and out, and thereby ultimately how much I lost. So basically, that
number under there in column D.
Yeah.
Wow, that's a big loss, isn't it?
Yeah, I knew it was about that much, but it's actually about 30% more than I thought that I lost. And I've had this number in my head for about 2 years because I knew that it was about that much, but I was always afraid to actually calculate how much it was. But because we've had a second massive bull run, there's this guy at my new job who mentioned that he's also into trading Bitcoin. And yeah, he said how much he lost at one point in the 2018 drawdown. And I told him, I lost about 50% more than he did. But it prompted me to figure out exactly how much it was, because this is like the final step in me coming to terms with, but also learning from this intensely emotional, this experience that was essentially characterized by emotional override after emotional override. And this is basically the start for me of the story of this podcast and getting the right behavior and the right temperament, because I made so many errors from the perspective of temperament and behavior in the 2017 Bitcoin bull run.
And you're definitely not alone in terms of having lost money either in Bitcoin or in markets. I've mentioned to you in the past that I've lost lots of money, numbers, multitude of what the number that you've lost there in the margin calls during the 2008 global financial crisis. So it's so painful. And mine wasn't necessarily an emotional sale on mine. I was forced because I had a margin loan. Sell. So there's definitely emotions involved with it, but something that I'll borrow on margin, at least not to the amount of leverage that I had.
Yeah, I've heard that margin loans is basically a guaranteed way to lose money in the stock market. And yeah, I hate to quote Warren Buffett, but he pretty much is the most well-known person for saying, never invest with borrowed money. So yeah, it's interesting. This is not to blame you or anything, or say that you should have known, but yeah, it's interesting to hear. You're an example of unfortunately, of what can happen if you don't heed that advice.
Can you work out what the weighted average price if you bought the Bitcoins at was?
I
think something even more painful. And what if you had kept? I mean, you don't have to work out the weighted average, but you could still work out how much you would pay if you had kept. I think you've done that, have you? Down the bottom.
Yeah, so I could do all of that because I've got the dates there. But this is not for bragging rights, but I think as part of the story and to burn this into for motivational purposes, I'd actually like to be honest about how much I lost. And I think because another thing you always hear on FinTwit or in the investing sort of media is you've got to lose some money, you've got to get burnt, and then that teaches you to actually pay attention and become, to learn the fundamentals, do a value investing course, whatever. I mean, it's so funny. My story is so stereotypical. I lost a bunch of money because of emotions. I then spent a year training myself and getting familiar with how to analyze a business based on fundamentals. And now, this year I'm gradually easing into actually deploying, what remains of my capital. But yeah, so the total amount of Bitcoin that I actually bought over the period from June 2017 to January 2018, so basically a 6-month period, was 5.5 Bitcoin. The total amount of Australian dollars that I spent on that was $1,000.
Yeah, so you bought 60,000. How many did you get? 5.5, did you say?
Yeah.
You bought them basically at 12 grand each.
Yeah. And there was two instances where I basically spent one where I spent $20,000 and one where I spent 15. And I remember I bought at the very top, basically in Jan, and this is the key, right? So this is where the emotions and the emotional overrides come in, and you get the fear of missing out, and there's all the certainty that an amateur investor feels from seeing the price going up and up every day, and that just increases your certainty as an amateur, and it, you know, you feel like you're missing out, so you just want to get in. So I was this totally naive, emotion-driven investor, so-called, at the time. And so what have we got? Yeah, so there was one on the 23rd of December 2017 where I spent $20,000, and that only gave me 0.61 Bitcoins. And remember, this is Australian dollars.
That must have been the top, because if you were to divide all the numbers in that column D by the Bitcoin in column A, you'd have the price that you paid at each point.
That's it. Yeah, on average it was 11,200 per Bitcoin. But yeah, there might also, I bought it on the independent reserve exchange. So because the prices per exchange differ, and the prices can be. Yeah, but anyway,
they were quite different across different exchanges, weren't they?
Yeah. So, but I did sell it. I sold. So the way I sort of worked it out, I just went to the exchanges where I purchased it, and there were 3 exchanges that I bought it on: CoinTree, which is an Australian one; Bitfield's the Kuwaiti one; and Independent Reserve, the other Australian one. But there was only one where I sold it from that exchange, brought it back into my Australian account, and that was Independent Reserve. And there was only 3 instances where I did that, and that was in July. So basically there were 2 sort of times when I got into Bitcoin. One was after a friend of mine in Kuwait. You know, she was pretty heavily into Bitcoin and had been, I think, since the start of 2017. And she told me at a party how well she'd been doing, and I sort of, you know, my ears pricked up. And at the time, I think it was about $2,000 per coin, and sort of pretty much immediately after I purchased it, it dropped down to 1,800. And as we know now from all the reading we've done about and the interviews we've done, I felt that loss 2 to 3 times more than an equivalent gain. So I felt that it had gone down to 1,400 rather than 1,800. So and because I hardly knew anything about Bitcoin, and I thought, you know, it was just gambling, and ultimately it was meaningless and worthless, for me, that was a sign of the top. And so I sold it all. So I basically sold my initial purchase. Yeah, I think I sold everything, 3,200 Australian dollars by the end of July. I was totally out. And yeah, I decided that I hated Bitcoin. I was jealous of everyone that had made money, and I wanted it to go down more, you know, so that I could buy it, you know, when it was the same price that it was at the start of 2017, things like that. I think the only, I sold all, because I bought a few altcoins too. The only one that I left in the market was Neocoin, which at the time was thought of as basically the Chinese Ethereum. And I think, you know, there was like $1,000 left that I had there, and I just left it there for basically for entertainment, for the sake of entertainment. And then I think around about November 2017, it started coming up in the news. Like I'd totally forgotten about it. I banished it entirely from my mind. You know, it was like a combination of jealousy, but also fear at this amount that I'd lost, and because it's all so foreign and there's a lot of complexity, like there's all these strange exchanges that are kind of dodgy, you know, I sort of ran for the hills really. But at the same time, I knew that a lot of people had made money and I was jealous of them. So there was a lot of emotions involved, is what I'm saying. But overall, I banished it from my mind until it came up in the news, and some other people, random friends that didn't know about Bitcoin and those sorts of things, you know, the equivalent of your taxi driver, started talking about it. And I went and checked how much that $1,000 worth of Neocoin was, and it had gone up 5 times. So
during 2018. So
that was 2017, November 2017, around about.
Okay, so that's when
yeah, and that's, so you remember that Facebook Messenger group I started, and like I got everyone in, and I was trying to, like, I remember, I'll never forget this call I had with you where I was trying to convince you. I was saying, you know, like I don't think I used the term, like, we are in the information age, that's for sure. But I was basically saying to you, you know, like everything's digital now, like we've got, you know, robotic banking tellers, you know. Do you remember that call I made with you?
I remember a couple of calls we had, but I also remember one plea from you to the broader group in I think it was the Facebook group that we had from you that said, come on guys, we've got to crack this. There's so much on stake here. You know, there was a real desperation for us to somehow crack the code or or work out a way to invest in which random cryptocurrency, and we're looking at Ripple and the Litecoin.
Yeah, I remember Ripple.
And I was, come on, guys, we've got to do this.
Why is everyone else making money? Yeah, like I remember I had all these trading, like on TradingView, you can get these like trading signal scripts and stuff. And actually, the only purchase I ever made was using some, I think it was Tron or some other random shitcoin to pay this developer like the equivalent of 100 Australian dollars for some code or some scripts on TradingView that gave signals based on essentially extrapolation of or momentum of the movement in price. And yeah, that was the only purchase I ever made using cryptocurrency.
Question: do you think there's anything that's similar between that November, December period in 2017, current period that we're going through, you know, other than Bitcoin hitting, is there something happening in the culture that's similar at periods? There's a lot of unrest at the moment, mental unrest and emotional unrest in society, I feel, at the moment, with everything that's happening in the US, all the conspiracy theories, the media and that. But I don't know, I can't, when I think back to 2017, I was job. I don't remember anything in particular, either in that sense or whether we were in a strong economic boom at that time or not. And we're also in one at the moment as well.
Yeah, I can't remember either. To me, the only reason it became so popular, I think, is because it essentially bubbled up to $10,000 per coin. And then suddenly the entire world's media started talking about it, to the point where I think I heard a story about a Vietnamese woman in a village who wanted to buy some Bitcoin. And to me, like, I remember, this has to be the top. Like, that to me was the sign that literally everyone knew about it, and probably everyone who could had somehow put their money into it. So basically what that means is there's no more money that can go into it, so it's not going to go up any further. And yeah, I think I heard about that in something like January or February 2018, and it basically went down for, you know, the next, I think about $3,000.
What's reinvigorated the growth this time? Is it
well,
in the stock market?
Yeah, the stock, like, there's been a huge boom from all the stimulus, but also, there is a case for Bitcoin. We're in some ways, we've got a new companion now. You know, we've got as we talked about in one of the episodes that wasn't an interview, there's the transistor now. We've had that since 1959. 50 years later, in 2009, this fake character, Satoshi Nakamoto, released Bitcoin, which is a kind of currency in a way that the transistor and computers that depend on or that use transistors, in the way that they can produce a currency, which is basically computer files that are hard to duplicate and therefore to spend twice if you're using those files for the purpose of spending money.
But is that a problem with the current currency that we have? Do people spend their dollar twice? I don't think that's a real problem that Bitcoin solves.
Well, you can if you can counterfeit the currency.
Yeah, but that doesn't really happen, does it?
Yeah, that's right. But so what happened in 2009 when this character Satoshi processed or issued the first block, the Genesis block so-called, is what you can do with each block that you process is you can put a message in, and the message in the Genesis block is a reference to an article in the Times in the UK about quantitative easing and the fact that a whole bunch of new, I guess, pounds were created because that back in 2008 was the great financial crisis, right? So he released it when the world was just starting to recover. My understanding is that the one thing that's attractive about Bitcoin is that it's deflationary, it's not inflationary. It's kind of set up so that as time goes on, there's fewer and fewer Bitcoins available. So if they become valuable to people as time goes by, the way that it's configured means that they're going to go up in value rather than down, which happens with currencies where central banks are issuing or engaging in quantitative easing. So what happened this year or in 2020 was trillions of dollars of stimulus, right? So what you saw with the so-called smart money, and there are supposedly some smart financial people who are finally buying Bitcoin, was them citing all of the quantitative easing as a reason to purchase Bitcoin, because there's a risk that with so much new money being printed, the US dollar is going to catastrophically drop in value. But of course, there's all the FOMO and there's the emotional reasons. Like I didn't think, oh, there's been a bunch of money printing so in 2017, so I was going to go and buy Bitcoin. I barely even understand how money printing works, let alone use it as a basis for my investing decisions. I only bought it because everyone else was buying it and it was going up in value, and people had made millions of dollars off of a small amount invested, and I wanted to do the same. But at the same time, like most amateurs, I was a chicken, and the more it went up, the more confidence I had, which is the opposite of what you should be doing.
Yeah.
And I got taught a lesson. So just to finish the full accounting, if you like, of my mistakes. So I only ended up actually withdrawing about $22,000 of what I had invested. So I left $38,000 in the brave hands, the ones who had bought, for example, at the beginning of 2017, and then waited for all of the emotionally overridden amateurs like me who couldn't control their behavior buy and pay them for their patience at the top at the end of 2017.
Come back to what I was saying in those couple of texts that I sent you. The success or failure of Bitcoin is not necessarily dependent on its ability to be as you said, deflationary currency, or a currency that doesn't inflate because there's limited to 21 million of them. It is really dependent on how many people decide to believe the narrative and the worth of it. So it all comes back to narrative. And the reason that you purchased them, and I purchased some of them as well, not nowhere near as much as what you did, but was because you can call it hype, but it's narrative. And if you're going to believe in the future of Bitcoin, you just have to believe that other humans will believe in that narrative into the future as well. We can say that about anything, but it's hard to know in 10 years or 100 years from, or sorry, not 100, but 10 years or 20 years from now, whether people will still believe in that narrative or not.
Yeah, well, in addition to the narrative, like I remember the name of the Facebook Messenger group that we had, it was called E-Money Investments. And like there was, I at least, I did have faith, well, I had this belief that, like I wasn't totally naive. I knew that a lot of the initial coin offerings were total bullshit. And there was like back then, that was when Silk Road was still operating, and like Silk Road was basically an eBay for drugs and assassinations, and like all these terrible things.
And knife sellers as well.
Yes. I wonder if our friend Kusic was yes, maybe he got his start selling to Serbian drug dealers. So
we'll send you the link at the bottom of this podcast.
Yeah, we'll also put the link to Silk. But I think the FBI finally took down Silk Road, and they found the guy who was running it. But the thing is, like actually, a use case for Bitcoin, or the ones that were in the news at least, were everything on Silk Road was paid for using Bitcoin. And there are also those ransomware attacks, like including on some hospitals in the UK, for example, where basically your computer was locked unless you paid the ransom, and that had to be paid in Bitcoin. So, obviously all of those things were on my mind, but at the same time, I think I might have read the Bitcoin white paper from Satoshi, and I read a bit around the philosophy of creating a digital currency, and I genuinely believed in it, or at least I believed that it was a good idea to try to invent a new money that was totally electronic. Yeah, I don't know where I'm sort of going with this. I guess I And I remember settling on XRP, Ripple, because Ripple, like it was all about, so, yeah, now I remember what I was going to say. So, because what happened in 2017, 2018, like in December, was basically the whole world was trying to buy Bitcoin, but it took sometimes days for transactions to happen because there were so many people trying to buy it and transfer it around that the Bitcoin miners could demand more for the processing fee. So to get your transaction processed quickly, you'd have to pay more. So basically, what everybody suddenly realized was it transferred really slowly. It cost a lot to do transfers. Like it was $60 to transfer something like, you know, a coffee's worth of Bitcoin. So basically, what the world suddenly realized was it was totally useless as a currency. And I still have, like, what I was, when I wasn't sort of emotionally overridden with greed, I was genuinely looking for the currencies that I was researching were ones that had fast transaction times or that were free, cost nothing to do the transactions. But yeah, what I sort of realized, and what I still haven't seen in the past 2 years that I've sort of known about Bitcoin, is I haven't seen anyone really, you know, making any purchases with it. It's not a currency still, and there aren't no other cryptos have become currencies either. All we've seen is that MasterCard and Visa and PayPal have continued, stock prices of those have continued to rise. And now, you know, my Apple Watch, I can pay for things using my MasterCard with my Apple Watch. So if anything, normal money has become electronic money, and even more so.
Do you think someone could craft an analysis to you, and you won't be susceptible to it now that I'm actually asking the question, but could someone create a narrative that would convince you to purchase Bitcoin again? So what if I was to say, look, actually, I do think Bitcoin is going to be a powerful tool in the future, and the main reason is because no, it won't be a form of currency in terms of easily being able to buy a cup of coffee, but it will be similar to gold. We all recognize that gold is valuable, and no one uses gold to buy a cup of coffee or their groceries with. They use currency, but gold has value. It's had value for hundreds of years. Everything that you can say about Bitcoin, you could apply to gold as well. And we're just making that evolution into a single currency. And while there are other cryptocurrencies that may have better functionality, what they miss is the narrative and the brand. You know, think about, I'm trying to think of a good example.
Oh, no, I'm convinced that it's good. And so what happened in the past week or two was you had Elon Musk and Chamath Palihapitiya, two, you know, celebrities on Twitter, if not in the world, recommend the Signal messaging app. And the Signal messaging app is open source, it's not for profit, and it's designed from the ground up with privacy first. So there's some key facts there. It's not a for-profit organization. They're not going to sell your data for anything. They're not going to throw ads at you based on what they've managed to sniff out of your messages with other people. And it's essentially got the public good at the center of it. It's, if nothing else, about protecting the privacy of your communication. What else have we got in terms of a public service that the internet and computers have provided us? We've got Wikipedia. Douglas Adams, you know, one of the best authors, you know, ever, who wrote The Hitchhiker's Guide to the Galaxy, he basically mentioned, you know, in that series how, you know, in the future we will have a guide to the galaxy on a device that fits in our pocket. Well, because of Wikipedia, we have in multiple languages on our smartphones with an internet connection. We can also download, presumably, Wikipedia for offline use. We now have The Hitchhiker's Guide to the Galaxy in our pockets. And what is it? It's not for profit. It's open source, you know, and it's basically there as a public service. And it vastly raises the quality of life for humanity, because it basically pushes the sum of human knowledge everywhere there is an internet connection. And it doesn't require high bandwidth. It's just simple text on a page. So it can be loaded via a satellite connection in Antarctica, or in the Sahara Desert. If someone can understand the language, if they can read, they can, from their mud hut, in a tribal context, be at the same level, or access the same level of human knowledge as someone, who's had the best of modern civilization and education, sitting, in London at some university. So we've covered communication, we've covered knowledge sharing, but the internet also has a open source, also privacy focused solution for money. And that, for better or worse, is Bitcoin. And it's also shown the way for, or inspired a bunch of other similarly open source, privacy focused, not-for-profit cryptocurrency. So I guess what I'm trying to say is that these are examples of how the transistor, within sort of 50 years, let's say, as humanity sort of figured out how to use them, it's resulted in these three amazing advances. So I think there's something virtuous and something good and something revolutionary about Bitcoin, and maybe it's not going to be Bitcoin. And I think that's what everybody's sort of realized, and we still know it. It's still fast.
The question I've got with Bitcoin, and as you were saying, that it's quite expensive to be able to transfer it, and it wasn't as quick as what people were hoping it would be in order to make a transfer. But is that just a matter of time before the technology catches up? It sounds like that's an infrastructure problem in terms of speed and cost. Surely in 5 years or 15 years, the ability to exchange Bitcoin will be more efficient and effective.
Yeah, I just Googled the average Bitcoin transaction time, and CoinMarketCap, in an article from September 2020, so 3 months ago, said it takes about 10 minutes. Whereas, using...
Why does it take that long? Why does it take 10 minutes rather than...
I don't know enough about Bitcoin. All I know is that there's these mining computers that process Bitcoin transactions in groups called blocks. Essentially, as I understand it, Bitcoin is... the integrity of Bitcoin, or the avoidance of double spending, happens through competitive accounting, where you've got a worldwide network of computers, I think the majority of which is actually located in China. And I don't know enough about it I'll sound like an idiot if I try to say how it happens.
I've just had a look on the internet and gone on.
But it is a fact, regardless, that the system is too slow. Nobody is going to want to wait 10 minutes at the goddamn coffee shop to pay for a coffee,
But my point is that won't that speed up eventually?
Yeah, it would be interesting to see a graph over time, but I think actually it used to be really fast, but as it's gotten more and more popular, and I remember there was the Lightning Network. It was all about the Lightning Network at the end of 2017 and how that was going to produce payments that happened instantly. And I have maybe the Lightning Network now. Well, it can't have been implemented because the Lightning Network was supposed to produce instant payments. But if there's still 10 minutes, it hasn't been implemented. And there was always a joke. I remember that, the Lightning Network was about to be deployed, but that it had been about to be deployed for the past year, sort of thing.
Here's someone's response. It says, whenever you send someone Bitcoins, the transaction goes through different computers running the Bitcoin protocol around the world that makes sure the transaction is valid. Once the transaction is verified, it then waits inside a mempool. In other words, some sort of limbo state. It's basically waiting to be picked up by a Bitcoin miner and entered into a block of transaction on the blockchain. Until it is picked up, it's considered an unconfirmed transaction or a pending transaction. A new block of transaction is added to the blockchain every 10 minutes on average. However, since there are so many transactions lately, due to the price increase. And a block can only hold a finite amount of transactions. Not all transactions are picked up instantly. So you need to wait for a certain amount of time until a miner decided to pick your transaction out of all those sitting around in the mem. Once your transaction is included in the block, it receives its first confirmation and it's no longer pending. After another block of transactions is added, it will get another confirmation and so on. So,
okay, yeah, that's right. The new block is, yeah, that's right. That's the basic transaction time. But yeah, once it becomes too popular, as you said, there's not enough space per block to process the transactions here. And that's why you were seeing people paying more as a transaction cost for it to be included in the very next block.
Yeah, okay. Yeah, it sounds to me like it's got its problems, but I don't know if they're unsurmountable. And whether the system and enough miners and computer speeds and computer processing power increases enough eventually that it solves that logistics problem.
Yeah, I remember when I was doing my research for the Information Age episode, and I think it was on Wikipedia, there was a comment that what the Information Age has done is destroy borders, because anyone with an internet connection can perform work. So, you know, the classic one is outsourcing to India, you know, of call centers, or, you know, I remember when I worked for an engineering company in Australia, there was an office in the Philippines, and their work was just as good quality as ours in Australia, but they were paid, you know, a quarter of what we were in Australia. So, you know, what have we got now? What have these transistors given us now? They've given us a global communication system, Signal, which is not owned by, you know, it's a not-for-profit organization. It's open source, so anybody can compile it and modify it and produce their own, you know, Signal-based messaging app. And it has privacy, as I said. So it's essentially an enormous public good.
So you persuaded
yeah, we've got Wikipedia, and we've got. I'm just trying to it's actually pretty incredible what we've managed to cobble together in, you know, the what it's been 60 years, basic 61. We're in the 62nd year, are we? Since the transistor was created. So what humanity has managed to do is give itself a global communication system which does text, calls, and video chat. We've got the Hitchhiker's Guide to the Galaxy, you know, the sum of human knowledge in our pockets. And we do have a currency of sorts, which, as you pointed out, has some limitations, and really, you know, it's only every 10 minutes at the best of times that you can transact with it. But it, you know, it's trustworthy. Like, there's a perennial sort of joke, or a constant joke about Bitcoin. And I remember back again when I was doing all my research in 2017, there was like a blog or a website which tracks all the news articles which say that Bitcoin's in a bubble and it's going to crash. And, you know, according to these, it is always in a bubble and it's always about to go to zero, but it hasn't. You know, it's been 11 years now, or 12 years. We're in the 12th year since Bitcoin, and it's not at zero. It's at $40,000 damn dollars. You know,
dollar cost is what you should have been doing.
Well, that's the final part of my reconciliation here of my the results of my emotional override. So the amount of Bitcoin that I left on the table, that I lost, basically was 2.85. So if you convert that to Australian dollars, I lost according to the current value, if I just freaking left it there and not wasted it on shit coins and lost it all. Or there's also $12,000 that worth of Bitcoin that I couldn't extract from the Fast Coin exchange. There's like the shittiest little shitcoin exchange called Fast Coin that Bitcoin Benny, this Australian YouTube channel, he recommended it. And so of course I went and put like a whole Bitcoin in it. and I only managed to get, 0.75 of that back out. So there's, I lost $12,000 in today's money right there. But so the amount that I lost, if I hadn't have traded it all, if I just held on to it, I lost $143,000 worth of Bitcoin.
Yeah.
And if that 5.5 Bitcoin, if I just left that 5.5 Bitcoin in there and let it ride and kept it, now I'd have 250,000, worth of Bitcoin now. I'd have $250,000.
Oh my God, that's painful. That's a cheap apartment or a,
That's a Lamborghini Gallardo. That's what really gets me. That was my Lambo, man.
That's only 3 years ago as well, which is really painful. It's not like it was 15 or 20 years ago.
Yeah, that's right. And the cost basis was 60,000. So that's 190,000, so yeah, because today it's 49,000 Australian dollars per Bitcoin. So if I bought 5.5, that's $750,000. So we were onto something. But the whole point of this for me is that, and it's like what you always hear from everyone, all the investing classes, all the courses, all the books, they say, don't try to time the market. Just buy something that's good and let the team that's behind it get on with the work, and give them time, give them 5 or 10 years, And the same applies to Bitcoin. If I had just bought it and seen that it was the dominant, so we also talked in another episode about the blue ocean strategy and the star principle. Can you, because isn't Bitcoin a classic example of the blue ocean strategy? What do you think?
I think it is. It's looking at an existing industry and trying to work out where there's not value being added and where there is value to be added, and trying to address that market.
Yeah. And what is Bitcoin in terms of the star principle? Well, the cryptocurrency niche market is definitely growing at 10% per year, and Bitcoin is the dominant, the leader in that niche. So, to me, this is just a fantastic endorsement of the star principle. If only I'd known, if only I had applied the star principle and realized, shit, all I need to do is buy that leader of the cryptocurrency niche and sit on it. If only.
I also think that another important lesson from all this is how you react to, let's call it, failure or loss. And it's the most painful form of self-harm that you can do, is to ask yourself the question of, why, if I had have just done this back then, I would now have so much more benefit, or why didn't I just do this back in the past? And because it's a question that will just keep digging away at you mentally. And it's sort of what you're doing at the moment. If I had have just kept those 5.5 Bitcoin, I'd have $250,000, $300,000. If I'm so stupid, blah, 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 it's sort of a form of self-harm. But the real question is always to ask, what should I do now? Should I buy some Bitcoin? Should I?
Yeah, I went through some emotional pain, but I'm over it. And I feel proud, actually, that I've finally done this full accounting. I think there's some errors. Like I wouldn't have paid $32,000 for a Bitcoin. So I might do some more digging to figure out exactly how much I lost. But I know it was definitely between $30,000 and $40,000. So yeah, I felt shame, definitely, especially in early 2018. And you remember when that messenger group blew up? Like, we had all these arguments, there was all sorts of personal attacks.
Well, I don't remember that. What were some of the personal attacks? I don't remember that.
Oh, I remember Muhammad, like, he was like giving me shit, as he always does. And he was great. Like, he was doing his job as a friend, but because I was feeling under pressure and the shame that I was losing money, and I obviously had made emotion-driven decisions, like, it was just too much for me. And I think I let his joke sort of get the better of me, and I insulted him back when he wasn't insulting me. But I also remember, like, I think he left the group, and I think my cousin did as well. And like, there was like this moment where my cousin, like, he had like a private chat with me, and I think he was anticipating that I was about to blame him for losing some money, and I wasn't. But I think he also must have lost a bunch of money. And I think anticipating that I was about to get stuck into him, he laid into me, and like he went on and on and on for like 10 minutes, like talking about all this personal shit. And the thing is, like, I had never actually really had that much of a personal relationship with him. Like, I didn't know much about him at all. He didn't know much about me, but he was like, he was going nuts. And like, there was a lot of like massive emotional and social breakdowns as a result of the drop in price. So yeah, but like I don't know. I went through a period. Oh, and another story. Like, I think like it's nice to talk about this finally, and just to be. It's useful, I think, to just be totally brutally honest. And I wish I'd done it earlier. But like another example of the impact that it had on someone was there was this guy at work when I was on my last job in Adelaide, and cryptos just came up in a discussion in the lunchroom one time. And just as an example of this pent up emotion and rage and fear that whole experience had for people, like, he was also someone who I didn't know much about, but we were friendly. We chatted occasionally, and we worked together sometimes. But suddenly he, like, everyone had left and like lunch was basically over, but he essentially cornered me and told me for like 15 minutes the whole story of all of the money that he made and then lost in Bitcoin. Like, he was up hundreds of thousands of dollars, but then it dropped. And I think because it dropped so much, so he made on the way up, to December 2017, he made a bunch of money. And then, like me, and a lot of us, he dumped it all in shit coins. And he then proceeded to lose most of that money. But because all of that is taxed in Australia, he had to still pay. He owed the tax man for the gains that he made on the way up, but he didn't have any of the profits left to pay for the taxes. So I think what he told me that he did all of this wash trading or some approach to trading, which essentially concealed, or it made it look like he made a bunch of losses that he didn't make, so he could offset all of these capital losses against the gains. So in the end, he didn't have to pay as much tax. But you could tell by the intensity that he had in his voice and on his face. It was a harrowing experience for me. And the fact that he just like it was like he was looking around for someone to tell this to, and finally he saw me, and he found someone who'd gone through this, and it just, the floodgates opened. But yeah, like as a result, like that's what it did to me. And you were a huge help for me here, Ben. I basically did that value investing course with Kenneth, and like I knew, because after the Bitcoin thing, then with Muhammad, I was getting into, the inverse. So the bull and bear, 3x bull and bear ETFs. So TVIX, SVXY, UVXY, basically the ones that go up at 3 times the market going down. But that's all about timing. And I think I lost like $3,000 on that, or maybe 5,000. So that was, so after the Bitcoin stuff, but then it was these bull and bear ETFs with Muhammad, and I lost another $5,000. So but it all basically resulted in me realizing, wow, there is money to be made here, but it's not with this emotional approach that I basically use.
And I think like after that sort of lesson, and then also the lesson that I had, the global financial crisis, less so with Bitcoin, but it helps you clarify what your philosophy for investing should or will be going forward. And so if you're new to investing, or whether you call it investing or speculating, everything's open to you. Anything that can have the potential to make money, whether it's Bitcoin, current cryptocurrencies, stock market, bonds, casinos, horse races, they're all open in terms of potential opportunities to make money. But if you develop a philosophy either through loss or through just your own self-maturity and intelligence, you close off a lot of those. through wisdom. You close off a lot of those so that you don't actually end up exploring them. And that's a good thing to do, I think. And so if you end up, I know we're eventually going to talk about your framework, whether we do it tonight or whether we do it into the future. But I think somewhere in that framework would be ideally a philosophy or a criteria for what you will or will not invest in. And it can be based on past experience. Like if you were to have cryptocurrencies within scope, then you need to be really mindful of the amount of emotional weight it can put onto yourself, in addition to the lack of other form of financial benefits that it can create. Because one of the main reasons that Warren Buffett doesn't invest in gold or cryptocurrencies is because he sees them as pure speculation. They're not things that generate something. They don't generate earnings. They don't generate in themselves any sort of profit that can be redispersed back out into the shareholders. And that's why he doesn't play that game at all. At least that's what he said. So look, I just don't think that I'll ever never say never, but I don't think I'll go back into cryptocurrency. And I definitely won't go back into margin loans, that's for sure.
Tell us more about these margin loans, if you don't mind. I mean, you don't have to disclose this. You can disclose as little or as much as you want, but how did you get into them, and who convinced you to do it? Was it your own reasoning?
Oh, it was definitely my own reasoning, just really thinking about wanting to have large amounts of money and wanting to play the long game. That's been even with shares, I haven't been specky. I've always been looking to play the long game. I just thought if I could have a bigger asset base now, as in when I was taking on margin loans, then over the longer term, that asset base, given all the ups and downs of the market, would eventually be a bigger amount of money than what I could do on my own. I have to try and remember what sort of interest rates I was paying, but it wasn't that bad. It was maybe 7% interest per annum on it. And my back of the envelope calculations was as simple as, if you can get 7% out of the market plus 1 or 2% dividend, that covers those. And then over the long term, the asset builds up. I didn't purchase index. I purchased specific companies, and they were reasonably blue chip companies. They weren't too specky or anything, but when the market dropped, once you get below a certain ratio between the assets that you hold and the liability that you also hold back to, then you have to either do one or two things: sell some of the shares or put more assets, in other words, cash, into that portfolio. And the market, I was playing at that time with hundreds of thousands of dollars. So
wow.
the impact was very large. So as I said, I haven't calculated it exactly, but I'd say 3 to 4 times the amount that you lost in Bitcoin.
Wow.
Yeah.
And that would have felt, because what I just realized, because we feel the loss 2 to 3 times more than an equivalent gain, right? So I basically lost $38,000. So that felt like $120,000 that I lost. I think, that I literally was afraid. It was a period where I used to think about how much I lost, but also because I knew it was so much and I was so ashamed about it, I was afraid to actually calculate it. So it's really, it's January 2021 now, and it was in 2018 that loss happened, January. So it's taken me 3 years to overcome that pain enough, and plus, it's so funny because it was when I went to Qatar that the price reached an all-time high, and now I'm back in Qatar with a new job, and lo and behold, the price has reached another all-time high, and it's double the previous all-time high. There's some really interesting, synchronicities that are going on here. But yeah, so that means that loss that you made, it would have felt astronomical.
Oh, it was devastating. It was,
Yeah, the psychological impact, because you multiply that real loss by a lot more. You must have been feeling bad for years.
yes and no. I think it's devastating in a way, but I don't know whether it was over years. I know there were some particularly bad days at that time when I was still working at the corporate advisory firm that I worked for in Brisbane. I don't know. I definitely felt terrible, and that's why I definitely think that it's just too risky. I don't think it's better for me. It's better to be secure and earn eventually $50,000 passive income than try to be risky and earn great riches. I think if you're going to, I think that I need to, or most people need to take a stepped approach to investing. And the first step has got to be, you've got enough money to pay for your food and accommodation. If you can't get those basics covered, then you're in big trouble. So you shouldn't be running around taking on debt to get loans for whether it's cars or shares or clothes or other things. You need to get to first base, and then once you've got that covered, then you need to start thinking about, well, what's the next step? Is it securing a house for yourself, or is it just having spare cash in the bank? And the individuals will decide for themselves what that next step is. But then as you get up the steps, then you may decide that you want to open yourself to more and more different types of investment, some that might be speculative in nature. But I think you need to go a fair few steps up the stairwell or up the ladder before you play in speculative areas such as cryptocurrency or even the stock market.
Yeah, I think where I was going before, and in response to your question about whether Bitcoin is legitimate and whether I might be convinced to buy it again, I guess I'm happy to be able to say or respond somehow vaguely intelligently with the observation that you can apply the star principle to it and it comes out the other end looking good. So maybe I wouldn't purchase it solely based on that, but I think it's reasonable to say that the cryptocurrency niche is growing at 10%. And I think it's also reasonable to say that Bitcoin dominates that niche.
Yeah, are they the two main criteria of the star principle, aren't they?
Yeah, and also, to me, you're the one that read the Blue Ocean strategy, but my limited understanding is that, if you're going to be an entrepreneur, or a good way to run a business is to basically invent a category and have your business be the one that, can basically come to dominate that blue ocean, if you like. Is that right?
You want, the idea around blue ocean is you want to be in a blue ocean. You don't want to be in a red ocean. A red ocean is where there's lots of competitors fighting each other and causing blood in the water. You want to identify a new market that you can play in by yourself, so you don't have the competitors, and you get oversized profits from that. Obviously, that new market is only a new market if it satisfies a need, if it adds value to other humans. So you can look at existing industries and see how they're servicing customers, and see where they're not servicing customers, and try to create a new market out of that. And I do agree. I'm just trying to work out what is the market that Bitcoin is serving. If it's not a form of currency, then potentially it's a digital version of gold. The other thing that it could be, and not many people think about this, is that it's serving a narrative market for humans. People want to believe in certain stories, and there's a story of Bitcoin, and it's about
a fantastic story because no one knows who Satoshi Nakamoto is.
Yeah, and that's right.
It totally meets the whole anonymous thing of the internet. This hacker.
Yeah, being able to transact across borders, government can't trace your transactions and all of these sort of things.
Also, you feel like a total badass when you have Bitcoin, because like there's all these like obscure exchanges and there's these like Bitcoin wallets, and like when you have to try to explain it to people, like, you know, they don't really get it, but they kind of think that you're cool because, you know, you're brave enough to, you know, dabble in it. And also it's really complex because, you know, nobody can, like, your bank account number is hard enough to memorize, but your Bitcoin wallet address is like, you know, I don't know, like 50 characters long. There's a whole lot of sort of, you know, coding and internet and hacking badassery that it sort of these images, you know, it invokes these images.
And it also benefits from just being new, something that's new and novel. I think that works in its favour. I know it's been around for 10 years, but 10 years isn't a lot, very long when you compare it to other currencies or the standard of gold or currencies that we use to exchange. So it's new, it's novel, it's got that story. So maybe the value in the value of Bitcoin is not so much in its form of currency or even its sort of storage of wealth. It's because that storage of wealth is just reflected in its price, and the price is not a reflection of anything else other than the narrative and the story that people want to believe. So I think, like, if you were going to apply the blue ocean strategy thinking towards Bitcoin, it's the story of Bitcoin is the value of Bitcoin. So look at the market.
A big part of, sorry to cut you off, but I think if we're going to talk about narrative, we have to talk about liberation. And, you know, when I was listening or doing the season 1 recap, I mentioned the word liberation a couple of times in the first couple of episodes, starting with when I interviewed you about the compounding plan that you came up with. I like the whole idea of starting a currency which doesn't depend on a bank, or doesn't depend on an army or the dominance of one particular country, but it's just, if you like, it's an emergent property of the internet, or an emergent property of humans' interactions with or use of transistors. There's something that sounds like liberation to me, and it sounds like a whole new world. You know, a key sort of, like, you always hear about, you know, on Bitcoin forums and stuff like that, people say, you know, well, it's, you know, it can't be controlled, and the fact that it can't be controlled, and there's no slavery, there's no subjugation, there's no oil wars, you know, there's no manipulation from central banks. In a way, it essentially, Bitcoin is just a mathematical formula that, you know, is recursively applied, you know, by transistors. And it's so cold, it's a calculation, and it's, in a way, it's elevated above the bullshit of humanity, and it will just keep on cycling on, you know. I think that's, people recognize that it's above the tribal rubbish of humanity in a way. I feel like that's a strong part of the narrative, and that's how it can gain some legitimacy for people. And that's why I was sort of bringing up, discussing it in the context of Wikipedia and Signal, these other two sort of fundamental things about how, you know, what we do as humans. You know, we're basically about gaining knowledge and applying that to make our lives better. We're also basically about, you know, if we couldn't communicate, well then, you know, we'd die, you know. And so what we've managed to put together for ourselves as humans working on this big project globally together for, you know, 60 years since the transistor came along, was now we have, you know, a communication app that is outside the control of, or it's like a global public service, Signal. It's the same with Wikipedia, and it's the same with Bitcoin. And what have you got also as a result of the information age, which is where these three things emerged from, or what resulted from the transistor? Well, you've genuinely got a world without boundaries now, without borders. You know, you can go along. You could set up a business which uses Signal to communicate with your team members and your customers. You could base the technology or whatever the business is based on. You could set it up using knowledge gained from Wikipedia, and you could receive payment using Bitcoin. And all of that entire system could emerge without the interference of a government, without recognizing borders. The entire planet, people around the planet could be your customers, and the payments that you receive would be entirely outside of or invisible to the taxation. Is that right?
I think so.
If you didn't convert it to, oh no, it would be taxed, wouldn't it? At least in Australia.
Do they know whether you've done it or not? They don't have access. Do they have access to the records?
I don't know. I'm just wondering, like, if you didn't convert it to Australian dollars, would that be taxed? Like, if you converted it to some other cryptocurrency? No, I think it's because they're all assets. So there's a capital gain regardless of the currency, as far as I'm aware. So
technically, as opposed to theoretically.
Yeah, but then so what happened? Yeah, the big, just to finish off that point. So at the end of 2017, after the bull run, the smart money, if you like, in the crypto space, everyone was buying the privacy coins, and those ones meant that you could do your transfers in an untraceable way. So the point of that was that you could dodge the tax man by concealing where you transferred your cryptocurrency to.
Okay. I've got an interesting thought experiment, and I only just thought of it now, so it's quite unformed. Let's say the Catholic Church said, and it doesn't have to be the Catholic Church, it could be Buddhism, or it could be any other form of Christianity, or even Islam, for example. Let's say one of them said, we're going to list on the stock exchange, we're going to issue shares, we're not going to change our basic business. And I don't want to get into some of the bad things that have happened in religions in the sense of, but some of the, you know what I'm talking about, bad things. But they say we're going to continue with our mission, which is spreading the word, expanding, getting new people into our religion. Would you buy, but we're still going to play as more or less as a not-for-profit. So, you know, the money is not going to be shelled out as a dividend. Would you invest would you buy those shares? Let's say it's the Catholic Church, and I just choose that it's random. And I don't mean it in the sense of would you invest in that because you are either pro or anti the Catholic Church. Just choose another religion if you're particularly not keen on them, or choose another philosophy like Buddhism, which is a bit more of a philosophy rather than a religion. Would you buy those shares? And why would you?
Are you getting at the point that Bitcoin might be a religion, or the narrative aspects might essentially be characterized as a religion? Like, you'd explain it as a religion more succinctly than any other phenomenon?
Yeah, and I don't want to classify Bitcoin or a cryptocurrency as a religion. I'm swaying more towards the side of that narrative that I talked about. Why do people join a religion? Often they're just brought up in that society, in that culture, so it's just a natural part of their life. But some people do decide to go into religion. And fundamentally, you would think that the reason is because they believe in the story of that religion. There are side benefits as well, and those of community, those of being part of not just community, but going to seeing nice buildings. Like churches are pleasant buildings, those pleasant surrounds quite often. So I see those as sort of side benefits, but just actually genuine benefits. The reason someone would join a religion, though, should in theory be because they believe in the story of that religion.
I think there are aspects of liberation in religion too. And this is like a fundamental thing for humanity. Like your average person, who's poor, and by poor, I mean anyone with less than $1 million, basically.
That's a pretty high hurdle. How many people in the world have less than $1 million? I'm going to quickly Google that. That's got to be something like that. That has to be something like 95% of the world.
Yeah, but see, I don't think this is a distraction, but we need to talk about it more at some point. But we started to talk about what it would be like to have $1 billion. Remember that? That was the last episode. Because I don't think people actually understand what it's like to have serious money and what you can do and how you can live and who you get to talk to, who comes to your parties, what parties you get invited to, what it's like to have your own island covered in 3 mansions and, manicured lawns and awesome yachts and helicopters and planes to go back and forth to that island from your multiple awesome apartments around the world. So that's kind of what I was getting at. Like $1 million is actually poor compared to the incredible wealth that some people have. Anyhow.
Googled it. I just want to answer that bit of trivia. It says, what percentage of the population has a net worth of $1 million US or less? They say in the US, and this is December 2020, so only a month old, less than a month actually. 11.8 million households have a net worth of $1 million. That's equal to 3% of the United States population and about 40% of the global millionaire population. So if you calculate that, 12 million people, or 11.8, that represents 40%. Then you 2.5 times it, which gets you to 24, gets you to 30 million. 30 million people have a net worth on the total planet of, we're getting close to 8 billion these days.
Right.
People have $1 million. So
that is very few people, hey? So those are basically the people who have made it in life and in the world. Yes. There's only 30 million people who actually can say that they've made it. Yeah, the rest of us are just poor and shit, and we have to work and we have to worry about a boss, and we feel depressed if our boss doesn't like us, and we have to accept poor working conditions. We can't just walk away from it. Most of us have a mortgage and we get stressed about failing to make the payments on that. There's a more primal issue with money, and this actually, like, liberation is the primal thing here that this can be about, this podcast and this investigation. And what you showed us in that compounding table, the result of that is not richness. It's not being rich, sorry. It's liberation. It's being able to sit and it's being able to call bullshit on people. Because one thing you have to do if you're poor and you have to work and you have to please people is you have to accept bullshit. You can't just give someone the finger who's being an asshole, because it's, you might be excluded from the group or the tribe, or you might lose your job, and you might not be able to make these payments that you have to make to live. So there's so many lies that we just have to not call people on. There's so much crap that we just have to put up with because we're not liberated.
I don't think the benchmark is $1 million. I think it could actually be quite a bit less than that. I think if you had, let's say you had 500 grand and someone was giving you shit at work, and there's a lot of jobs in the world these days. You could, if you wanted to, say, look, punch them in the face, get fired, and then find another job.
That sounds like liberation to me.
I mean, that's how you found this job, right?
At no point do I actually literally endorse violence, but I will still say it. I think it's okay to say that does sound like liberation to me.
Yeah, I take your point though. Financial stability or financial wealth is one quite critical aspect to a sense of well-being, I think. I know it can result in a false god for a lot of people, continuing to chase massive amounts of wealth. But
getting back to your question, yeah, so I got us off track a bit, but the way that I characterize religion is as a source of liberation. We are, from a zoologist's perspective, and my favorite zoologist is Desmond Morris, who wrote The Naked Ape in the 70s, I think.
You have a favorite zoologist? That's interesting.
I do. Yeah, he's also one of my intellectual heroes. Is he my number one intellectual hero? It'd have to be Steven Pinker or Desmond Morris, and
What
they're
about,
both. Tell me.
what about the guy that wrote Sapiens? What's his name again?
Yuval Harari.
Yeah.
He's, to me, to be a real
Oh, you don't like him because he's Jewish.
intellectual hero, you have to be provocative, because there are sacred cows in civilization and society. And to be a hero, you have to be capable of killing those cows. And I don't think Yuval Harari he is an incredible intellect. And yeah, Sapiens and Homo Deus are fantastic books. And you have to read them, along with Collapse and The World Until Yesterday by Jared Diamond. Yeah, but The Naked Ape is, in a way, scandalous, because zoologists are not supposed to have humans in their crosshairs. Zoologists are supposed to respect the human religion that humans are not animals. And he breaks that rule and says the emperor has no clothes. And Steven Pinker did the same thing. Adding to the list of intellectual heroes, Leda Cosmides and John Tooby, who, along with David Buss in the early 90s, basically started evolutionary psychology. But what Steven Pinker is also an evolutionary psychologist, or at least takes that perspective on. And what he's got this really great TED talk where he basically points out that modernism and postmodernism have basically led to a withdrawal of humanity from the humanities, because it's produced art that is not beautiful. And why isn't it beautiful? Well, we are animals. We have a sensory system and a cognitive system inside a brain that consumes and combines and interprets those sensory inputs along lines that were defined by biological systems that cause survival. You know, like the best sort of phrase from Pinker is that we love classical music, or we love some forms of music, because they are auditory cheesecake. What's a cheesecake? A cheesecake isn't filled with rocks and concrete and carpet for a reason. A cheesecake is designed to satisfy this biological system's search for fat and sugar in the environment, just like music is concocted to satisfy the auditory processing system and sensory apparatuses. Pattern seeking evolved a system based on the survival of and reproduction from those that have survived, because we have some systems that automatically process input, and music satisfies what these systems are automatically searching for and the patterns that they're looking for. And that's why it's pleasurable for us to hear some things compared to other things. And it's all based on the fact that we have spent 10 million years in the Homo genus evolving, or exposed to the environment of evolutionary adaptedness, as these biologists say. So,
but isn't there plenty of modern art that is beautiful? And I would also just not to debate what you're saying, but more of a question. Isn't part of the reason that there's so much ugly art out there just simply market forces? And the reason that people need to do what we might call ugly art is because you've got to get people's attention. So you've got to be doing something new. I could probably train for 30, 40 years and paint something that is classically beautiful. I'm not saying I could replicate the Mona Lisa or something. You could practice enough to get to a classic landscape or a classic bowl of fruit or some other classical painting and have that produced as a form of beauty, but it wouldn't sell. And the reason it wouldn't sell is because, look, I don't know artwork that well, but
yeah, I get your point. You do need to stand out in the marketplace, and there's nothing worse than being in a straight jacket of conformity and feeling there's only one way to express beauty. Yeah, I get your point. But at the same time, like in Pinker's TED talk, he was saying how the humanities have become less popular as modernism and postmodernism have pushed people in the direction of, and let me try and find, I got a screenshot and I put it on Twitter, try and find, I guess as we get towards the end, I wanted to sort of summarize what I'd gotten to in terms of understanding behavioral investing.
I reckon something that universities could do is create humanity classes that are combined with either entrepreneurship or some sort of innovation or business degree, like some sort of hybrid between what you call arts or humanities and business, entrepreneurship, or IT innovation or something.
Yeah, sure. Creativity, I've heard, is the one way us humans can stay ahead of the machines with the rise of machine learning and AI. Yeah, but like here's a screenshot from what Pinker was saying. So modernism and postmodernism have produced visual art without beauty. So you've got, things like, I don't know, the dataists at the turn of the 20th century who were, a gold-plated toilet was art. You've got those, classic abstract modernist paintings where, a black canvas is art. It's not beautiful. It's visual art, yeah, but a black canvas, that's not beautiful. It's also produced literature without narrative or plot. It's produced poetry without meter or rhyme. And I remember those poetry clubs I was in Brisbane, and how you came along to one of them. You actually wrote a poem with a meter and rhyming, and it sounded great, and there's a reason for that.
I wrote that poem for you.
Ah, thanks, darling. But none of the poems that I wrote had rhyme or meter. We've got architecture and planning without ornament, human scale, green space, or natural light. And like, what is modernist architecture known for? Massive slabs of concrete that are just the opposite of, they're just cubes, and they're massively oppressive. We've got music without melody or rhythm. We've got criticism, or literary criticism especially was the ones he laid into, without clarity, attention to aesthetics, and insight into human condition. So,
and what's the reason for that? Why are they creating that?
The departure from recognizing human nature, and maybe it's liberation too. Like perhaps I think because what did we have with so there was at the beginning, in the first half of the 20th century, we had what did we have? What's it called?
Nazism.
Nazism, but a feature of Nazism. But it was also, it wasn't just the Nazis. It was respectable to have this opinion. Eugenics. That's right. So because of it was basically a naive application of Darwinism and evolution. And in a way, with eugenics is actually rife in animal husbandry, but it was the application of animal husbandry and the eugenics that it's based on to humanity, which led to the atrocities like what the Germans and the Nazis, how they sort of decided to arrange their civilization, where basically they were just liquidating degenerates, what they so-called. And maybe the second half of the 20th century and its entire denial of human nature, and thereby the basis on which eugenicist decisions were made. Maybe that's why there was this massive denial of human nature, and the invitation to evaluate without regard to their biological characteristics, and the hard sort of the determinism that invites about people's validity. So maybe we can't be blamed for the emergence of postmodernism, particularly. Definitely, I think hardly anything can be blamed in terms of a reaction to these eugenics-driven atrocities. But regardless, it a bit overboard is what Pinker said. Sorry to interrupt. Like, so you can't actually proceed. You can't get as far as you could in trying to help people and come up with government policies, for example, around mental health or how to design cities. Like, there are just facts about the limitations of humans that a zoologist would describe, next to the his functional description of how a zebra, behaves. So I think there's, and it's the same if we're about investing here. So if you accept that we have been evolving for 10 million years and we split off from Neanderthals 400,000 years ago, and in its efforts to produce a biological system that was as viable as possible in the environment of evolutionary adaptedness, if we accept that through natural selection, there were some processing circuits, cognitive processing circuits, if you like, that biology sent us out into the world, born, pre-packaged without having to learn. If you accept that somehow we have a nature due to the perfectly reasonable response of this biological system to the environment and these repeated exposures over many cycles, over millions of years, if you accept that somehow there is a direction that we go in through this simple biological inertia, then you need to, if you want to perform highly and you want to do something well, you need to recognize, you need to recognize the dimensions of this biological system that we're trying to use in our case to make decisions around investing. And I actually wrote something in my summary about, let me just to try to summarize what this nearly $40,000 loss resulted in me doing. So one of the things was to do this course, and I learned how to do value investing. But also and what it's done, actually, this loss has prompted me to start to apply what I learned in my psych degree, which I've never actually done apart from in my master's thesis. It helped me to run that experiment and analyze the results and write the paper that I managed to publish. But finally, what this loss has made, prompted me to do is to use, what I know about psychology and use those skills that I have to do a bit of a literature review, and actually to investigate a bit more the one sort of passion that I got out of psychology, which was actually after I finished my degree. I discovered evolutionary psychology, which is basically, it places psychology as a branch of biology. And I think that's key. All psychology is a part of biology, and it seeks to investigate the mind as an emergent property of the brain, which is a biological, it's a part of our organism. So yeah, I wrote a bit here. I said humans are primates that have evolved in the Homo genus for 10 million years and in the sapiens species for 400,000. Because of this, they have a suite of instincts optimized to the environment to which they were most frequently exposed over these long periods. The financial context is not offered frequent exposure relative. The financial context has not offered frequent exposure relative to the entire evolutionary career. For example, accounting has existed for only 1% of sapiens' existence, 4,000 years. This means instincts specific to finance have not been. Instead, we must make do with more general purpose instincts, or ones that do not directly relate to the challenge. There is evidence that the evolutionarily novel urban environment that more than half of humanity now lives in activates some instincts with false positives. An example of this is the stress response, which is supposed to help us flee from certain death in the claws of predators by increasing immune system activity and heart rate and reducing metabolic rate, things like that. The problem is it can be activated in the queue at the supermarket or when one's portfolio drops in value. The result can be death from a heart attack or selling at the bottom. Here, a useful instinct in the jungle has been inappropriately deployed and thus produced less environmental fitness in the concrete jungle. Due in part to such misapplication of instincts, a low-cost index fund outperforms all but the smartest active managers over the long term, for example, lifetimes. Curiously, the smartest active managers say that temperament, not intelligence, determines investment success. Quote, "The most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Success in investing doesn't correlate with IQ once you're above the level of 125. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble in investing." Close quote. That's from Warren Buffett in a July the 5th interview in 1999 in Business. So, informed by the academic field of evolutionary psychology, we can be more technical than these observations about temperament and conformity. Using this field, the behavioral investor shall anticipate which instincts will be activated by false positives amongst stimuli from the investing environment. Further, the behavioral investor shall minimize such false positives and reap the reward of fewer emotional overrides of rational decisions. Additionally, indifference to social proof is noted in Buffett's statement. It is time to consider this characterization of Homo sapiens' evolutionary environment by leaders from the field of evolutionary psychology, Cosmides and Tooby. Quote, "Our ancestors spent well over 99% of our species' evolutionary history living in hunter-gatherer societies. That means that our forebears lived in small, nomadic bands of a few dozen individuals who got all of their food each day by gathering plants or by hunting animals. Each of our ancestors was, in effect, on a camping trip that lasted an entire lifetime, and this way of life endured for most of the last 10 million years. Generation after generation, for 10 million years, natural selection slowly sculpted the human brain, favoring circuitry that was good at solving the day-to-day problems of our hunter-gatherer ancestors. Problems like finding mates, hunting animals, gathering plant foods, negotiating with friends, defending ourselves against aggression, raising children, choosing a good habitat, and so on. Those whose circuits were better designed for solving these problems left more children, and we are descended from them." Close quote. So it's as simple as that. You know, we're basically, over 10 million years, have evolved a system that, as much as possible, tries to automatically solve the problems of finding mates, hunting animals, gathering plant foods, negotiating with friends, defending against ourselves against aggression, raising children, and choosing a good habitat. You know, so it's all, like they said, like we've basically been on a camping trip for 10 million years, and then suddenly, you know, in the past, you know, blink of an eye, we sit at computers in concrete block that look terrible, which we access using a lift, and we're entirely sedentary, and we try to trade shares. So yeah, continuing with this, what I wrote. So social proof is basically conformity, and social proof was mentioned with Lee Caldwell. So social proof is basically conformity, especially when it's unclear how to behave in a social situation. Buffett says it's important to be detached from the need to conform, in fact, to be indifferent to going with or against the crowd. So consider, you know, that we basically have a bunch of instincts which anticipate that we will be in a small nomadic band of a few dozen people. So, you know, when you're sort of trying to survive with those people, it's important to sort of act as a unit with them. You know, you need to, there's going to be momentum or inertia in the direction of doing what they're doing. So already we are, you know, if you're, maybe that's why growth investing or the glamour stocks are so popular, because that's what everybody else in the tribe is doing, you know. Anyway, so to continue with this, Buffett says it's important to be detached from the need to conform, in fact, to be indifferent to going with or against the crowd or the tribe in evolutionary terms. This could be seen as difficult to achieve in the evolutionarily normal context described above that we had to figure out how to adapt to for 10 million years. So yeah, what the rest of, so when I was doing my my recap of season 1, I wanted to sort of nail down that evolutionary context for us to show, I guess, the equipment or how we are equipped and prepared, and the momentum and inertia that these circuits that have evolved over this time give us, and that we sort of bring to the table, as it were, when we literally sit down at our desk to make decisions about investing. So what this system, this biological system has given us, or what this means, is that we have a dopamine-based reinforcement system. Episodic future thinking or visualization is effective for us. We have an automatic decision-making system, the autonomic nervous system. We have system 1. We have system 2, which is more reflective or calculatory. And as Lee mentioned, we have a sort of imagination or visual-based thinking system, system 3, like he called it. But that seems to be the same as what Tom was saying is episodic future thinking. We're also biased, and we have culture and geography as a source of those biases. And actually, from that investing course that you said I should do, there's a whole list of biases that I now know about, and that I write about at the end of each of my investing analyses. So I'll list off those biases at the end of this. There's also mindset also matters to us. And there's the fixed mindset and the growth mindset. And if you have a growth mindset, then you'll respond to failure merely as a source of information about how to improve and grow your skills so that you can become a better investor. Because of what we are, the fact that we've been evolving all of this period and essentially come to the table without any real instincts to help us, dollar cost averaging is a good way to invest, because you will invest regardless of what the market is doing and regardless of what your emotions are telling you to do. Because of who we are and because of what zoologists say we are, we have a pendulum inside of us, basically, which pushes us between fear and greed. We can program ourselves mentally, and that's actually something that Tom, the clinical psychologist, mentioned, and that's the cognitive psychology perspective on our minds. But also, what was his name? Ross Bentley, the racing coach. He also mentioned that we can program we can have mental programs that kick in response to mental triggers, which is another. So what I'm doing here is sort of listing off the first principles that I managed to lift out of the first season. Ross also mentioned that we need to not hold on to things. We need to just let it go if we fail, and have faith, that there'll be another business that comes along that we can invest in if one that we've invested in not work. Another first principle is metrics. So we need to have constant awareness of how we're doing compared to the mental image or the episodic future thinking that we've engaged in to try to imagine where we want to go. It's useless to have those mental images without metrics that tell us precisely how far we are from that imagined goal. Another first principle from season 1 is that the small capitalization market is inefficient. So the reason for that is basically that there's more amateur investors who are investing in small cap companies, and they're more prone to these emotional overrides because they're less aware of the things that we've discussed in this podcast. It's also inefficient because there are just fewer skilled analysts. So mispricings persist for longer. Anchoring is another, psychological or a bias. So you can fixate on a price that the business used to have, thinking that, it'll return to that, for example. We'll go through some other biases after this. And a final sort of first principle that I got from our guests that matters because of who we are and what our nature is journaling, simply because it provides some time and space to go over and be honest about what decisions were that we made, and gives you time to reflect, and that can inevitably reveal any the basis for your. So yeah, that was a bit of a speech, but this is sort of where I am in trying to. Most of my thinking has been to try to get the context right, and that context for me is what a zoologist would think about what we are. So I'm really trying to get to these first principles, both in terms of biology or zoology and mathematics. And what I've also got 4 formulae from the first season.
Do you want to do those now, or do you want to do them in the next episode? Given that this episode's gone for 2 hours and 20 minutes.
It has, yeah. In terms of just, I guess because this episode was pretty much about, it started off with the shame that I felt about losing these things, and then I guess what I'm doing here is summarizing my response. So it's resulted in me sort of trying to leverage my interest in and knowledge about psychology, but also I can say that as part of my response, I've begun to learn some formulae that actually will help me in the long term dig my way out and actually make that money back, and hopefully make more, or make the gains that I was anticipating I would with my fear of missing out in 2017. So I'm not going to describe them all, but the details of them all. But the 4 formulae that our investigations have sort of revealed are the exponential function, or the compounding formula, delayed discounting, which was also was it hyperbolic discounting? They're both the same thing. So there's a formula for that. There was this dinky little formula that Ross had for mental imagery. So mental imagery with awareness will get us to the goal. He also had a formula for that. And then there's the ergodicity formula. So I'm not going to go into the details, but just as a catalog, in terms of mathematics and biological first principles, I feel like I'm starting to assemble something here that can be used as raw materials for a framework that will mean that I don't get swept up in a fear of missing out. I don't have my emotions overriding my decision making like they did, which did cause me to buy Bitcoin at the top at the end of 2017. And then fail to time the market across a bunch of shit coins, meaning that ultimately I lost $40,000 when I should have, if I'd just bought it and held it, had $250,000 by now.
Those formulas, I think they're very useful, not just in the sense of actually making a mathematical calculation. I don't think you would actually apply them for that, but just to have them staged out and segmented and to be thinking about them. Obviously, the most important one for us, well, maybe that's not the right statement, maybe not the most important, but the one that we would probably use the most is the exponential function, calculating the growth of something. Discounting wasn't one that we really have applied in a mathematical sense. I get the idea.
It's kept me out of the market. Because delay discounting, the reason Tom brought it up is that the gains that we can make mean less to us, because this $10 now is worth more than $20 in 3 months. So that the gains that I could hypothetically make, and that your spreadsheet from the first episode say that we will reliably make, that actually doesn't feel like $1 billion now. Because it's so far away, it feels like $10.
$50.
There's no motivational power.
Could you come up with a different example? Could you come up with...
Well, what we actually need to do, Ben, is we need to plug what we need to do. And that's what I wanted to do during the interview with Tom. But because he'd never actually put the formula to work himself, I don't think he was prepared to do that. I kind of put him on the spot. But what we should do is we should get this formula V equals A over 1 plus KD. And we should put $1 billion and 108 years into that and see actually what that feels like now, that $1 billion. And then we'll have the answer for why we're not putting our money into that system immediately. And that we can use that formula, that first principle, if you like, to then devise a framework for how we can motivate ourselves and how we can actually make that, feel the full value of that $1 billion. Well, actually, Tom told us how we can feel that. We can use episodic future thinking and as you were trying to get at despite me interrupting so much in the previous episode, a systematic, gradual series of smaller rewards.
So you can mentally calculate it here, because D is delay to the reward. We know it's 108 years.
Yeah.
A is the scaling factor. I don't know what the scaling factor represents.
Neither do I.
All right, we've got a problem then. 1 equals to prevent V approaching infinity as D approaches 0. Not sure what that means, but it's just the number 1. And then A is the amount of reward, which we know is $1 billion. So all we're missing to calculate it is K. So K as a scaling factor.
Well, if we assume K is 1, so that means 108 billion divided by, so I'm just going to put 108 divided by what? Brackets 1. I need a scientific calculator.
It's times. It's K times D.
Yeah.
If you assume K is 1, then D is 108. Then you get 108. So A divided by 1.
Isn't it? So A is 108. A is $1 billion, right? Sorry, it's not 108. So I'll put it all in. So 1 followed by 9 zeros. We're doing an American billion. So it's an A, sorry.
Yeah, so it's 1 billion plus K times D. And if you see K is 1, then D is 108.
Yeah, so I'm setting K as, all right, so that's 9.
Brackets between the 1 and the D.
Okay, so
in the formula.
So it's $1 billion divided by brackets 1 plus brackets 1 times 108. Is that correct?
So that's going to get you 109. So $1 billion.
Yep. So basically, what it feels like is $9 million now. That's what. So delayed discounting makes $1 billion in 108 years feel like $9 million now. So what it shows is that I am indifferent to that because I haven't gone and feverishly immediately engaged in the behavior that your spreadsheet says I should. Isn't that interesting? So I need to find a way to make it feel like more than $9 million now.
9 million should attract you pretty.
Yeah, well, obviously it doesn't because I haven't gone and immediately dumped all my money in an index fund, and I'm not doing everything I can to put it more and more in each month. I am planning.
I think what we're missing, and it's a critical thing from the conversation with Tom, is a plan with milestones and goals and short-term rewards and long-term rewards.
That's right. I think what we need to do is another episode where we apply as best we can everything that Tom said us that we should do, and we should do it the same with Phil and the same with Ross and all of the other
up on it. Yeah.
But because I got bogged down in zoology, and I was, what this has also been useful for is it's helped me rediscover my love of psychology, and finally I feel like I can apply what I spent 4 years studying, and what I've also felt a bit of shame about in not actually going on to having a career in psychology. But now maybe I can. What about you? You also studied psych.
Well, I did a 4-year degree in Asian studies, and I don't speak Japanese anymore.
Shit, man.
I know. I
think you did better than I did, though. At least you went to Japan and you lived there and you studied in Japanese.
Mm.
I tried to do psychology and I got burnt out in 10 months. Literally got burnt out. Never work in a regional part of Australia without support, seeing 7 or 8 disability support pension applicants per day. You will very quickly have a black outlook on life, very dark.
Imagine if you're in their position.
Sure. Well, all of those people, God bless their souls, they also had an incredibly dark outlook on life because they've been suffering for 20 years often, a lot of them, and they came to me anyway.
Who's this kid? Calls himself Will Waters, telling me what?
Assessing my life and my right to have a pension.
He doesn't know about pain. Out of university in 4 years, and he thinks he can say whether I get pension or not.
Yeah, that was really tough, but it did destroy my desire to do anything to do with clinical psychology. I ran away screaming.
I think it's okay to course correct. You know, you make the best decision, and that's what I tell myself with Asian studies. I made the best decision at that point in time to do it and to learn the language and spend time in Japan. But at the end of it, I decided that it wasn't the right road to continue going forward. So I think it's a similar story with you in clinical psychology. You thought it was the best thing for you at the time, so you did do it, and then you course correct.
Yeah, well, and it's also like if I'd been honest with myself, and this is another key thing from my life, you know, I knew I bought David Buss's Evolutionary Psychology, the New or Modern Science of the Mind textbook in 2007 after I finished my psych degree in 2006. And for the first time in my life, I read a psych textbook from start to finish. It was that one. And it was a revelation to me, evolutionary psychology, which is basically to say that I love biology and I loved the biologist's perspective on psychology. And I loved the idea of seeing myself studying psychology as just a branch of biology, because then that gives you access as a scientist to all of the tools and ideas and theories that biologists have to explain human behavior, and just adds on a bit of extra stuff from psychology, you know. And that's what I was missing from that whole degree, was the proper context. Anyway, I said that I'd talk about the biases. So what I learned from that course, Value Investing and Introduction by Professor Kenneth Jeffrey Marshall, was that we have impetuosity, weakness, affinity, reciprocity, anchoring, authority, availability, cleverness, incomprehensibility, consensus, peculiarity, intermixing, consistency, confirmation, hope, lossophobia, scarcity, hotness, miskontrast, and windfall apathy as potential biases when we try to make it. So you saw anchoring was on the list, and that was mentioned before, but windfall apathy was another one that was key for me in dumping all that money into Bitcoin. And that's because I just spent 4.5 years working in Kuwait, where I was earning, you know, 5 figures a month. So I in a way, that was because I'd basically saved all that money. You know, I'd spent probably, actually, I think I spent about $60,000 on international travel, going and seeing all these wicked things around the world. And, you know, I also dumped all that money into Bitcoin because
You did the
I was
people tour.
sensitized to having money.
You did the Access People tour. You went to Iran, to North Korea, and
I wanted to go to Iraq. Yeah,
Iraq.
exactly. What better expression of money to burn was doing an Axis of Evil ski tour, you know, and putting 60 grand into Bitcoin. Yeah. So windfall apathy was definitely at work as a bias. And yeah.
Do any of them cover fatigue? I'm sort of thinking along the lines of you are not finding companies that you want to invest in, and so you start to get fatigue, and therefore you find something that's close enough.
There's one called weakness. So maybe I should explain them. So impetuosity is simply when urges override logic. So that's good old emotional overrides, fear of missing out. And yeah, you just I'd say pretty much 90% of Bitcoin trades were impetuosity, especially in the second half of 2017 and in the past couple of months, with the latest run up to 40 grand US. Weakness is when passion overrides logic. So even when the framework says one shouldn't be buying it, you still, knowing that you shouldn't be doing it, you still do it. So maybe in response to your question, weakness is a bias. Affinity is when we like something related to a business. This can override the logic of not buying it. Reciprocity is, for example, if investment relations treats us nicely when we call them up and asking about the business, the feeling we have to be nice back to them can override the logic, the logical need to analyze and then not buy the business. So just feeling like you owe them something. Anchoring, that's just because the stock dropped, can override using logic to see if this lower price is cheap. So you're anchoring on a higher price, the price it used to be, thinking that it will inevitably go back up to that. But you know that has nothing to do really with how much it's worth. Authority is just because someone authoritative says it's good, can override logic. Availability is just because we can easily remember something about a business. This can override logical analysis about things that are hard to remember. It might be easy to remember because we just found out about it, or because it was a highly emotionally valenced experience when we found out about it. Cleverness, if we feel like Sherlock Holmes for analyzing this or owning it, it can override logic, funnily enough. Incomprehensibility, if it's hard to understand, this can override logical analysis by making us think it must be too logical for us, therefore especially logical to buy. Consensus, the herd can override logic. I think consensus is something that's driven by our evolutionary, the environment of evolutionary adaptiveness, a significant part of that being in a small tribe. Peculiarity is not being in the herd, could also be about overriding logic. So it's the opposite. So Warren Buffett, in that quote about temperament, said you don't want to make decisions based on consensus or peculiarity. You need to be indifferent to those two biases. Intermixing, so stocks are the best performing asset class. Do not let the need for a new and strange asset class override this logic. And you alluded to that, Ben, when you were talking about not wanting to buy Bitcoin because it's not an equity and doesn't give you dividends, for example. Consistency. So logic can be overridden by wanting to do what we've always done or what we told others we just did. Logic should be about able to unmake a mind. Confirmation. Mere confirmation only of our beliefs can override logic. Hope, confirmation bias due to hoping a business will do well can override the logical use of bad news about one to avoid investment. Lossophobia, the logic of still holding a business with a dropping price because its good fundamentals remain, can be overridden by a fear of loss. So that was the classic one when we did Phil Wilkes's interview and I talked about Amazon and how the sales for Amazon were growing at 24% compounded, but the stock price had dropped 90%. Well, you shouldn't be looking at the loss in the stock price. You should be looking at the fundamentals and not having your fear of loss drive you out of the stock or out of the scarcity. Coveting forbidden or at least scarce fruit can override logic. The word oversubscribed can override logic, particularly in IPOs. When it's a hot oversubscribed IPO, there's a lot of scarcity. That doesn't mean that it's good. Hotness, a feeling of being a master of the universe due to recently making some great trades, can override logic. So just because you've made some great decisions doesn't mean you will make another good one. Miskontrast, the second last, just because a comparables analysis shows a business is better than some others, can override the logic that a business should be good in the absolute sense as well as the relative sense. And I think that relates to, that's another answer to your question from before, Ben. And the last one, windfall apathy, we already discussed.
Thank you for all of that. What an episode. 2 hours and 40 minutes of absolute gold.
This is the Joe Rogan of finance.
This is Joe Rogan of finance. It's good we've given people a lot of listening content because you're going to be quite busy defending Donald Trump in his impeachment inquiry coming up. Arms on that. Good luck. Shall we say farewell to everyone? Say goodbye, Will.
Also, I wanted to say that.
Say goodbye, you bastard.
No. There's one more sentence because the first episode was putting Ben to work, right? And you said that we have to invest $35,000 a year. Well, I can say that I have now gotten to work and I've found a job in Qatar which allows me to actually do this. So I can, without noticing, invest $35,000 a year because of the fantastic salaries here and the fact that I don't have to pay tax. So we can actually do this. I can, in real time, in real life, talk about actually now doing what you said we should do in episode 1.
It's January now. What's your approach going to be? Is it dollar cost averaging in like once a month?
I can just mechanically invest according to what you said we could do. And because of what Lee Caldwell told us about, it's a non-ergodic system, what you've proposed, and there is sequence risk. So there's a massive right skew in the distribution of total returns. So what we began to do to address this issue, that usually the outcome is more like $500 million than $1 billion. And also because there's a massive right skew, there's a potential for tens of billions actually from this system if you apply it and you manage to achieve a higher compounding rate. So, because one thing we didn't...
I'm not greedy though. I'll satisfy with just a...
Okay, yeah, well, I would be too. And $500 million, you know, I could accept that. But because we didn't really talk about in our season 1 recap, we didn't talk really much about what Lee said, but it was very useful for him to give us that lecture on ergodicity and to temper our expectations a bit, and also direct us to do what we could to move towards the right of that total returns tail. And I'll for listeners who are not familiar, I'll put a link, as we always do, to the compounding sheet that Ben put together with the modifications from Lee. And someone we also didn't talk about in our season 1 recap was Tom Perfremont. And he was also very useful as a beginning to introduce us to how to increase our compounding rate and get towards the right of the tail. So what we're going to do in season 2 now is interview a bunch of investors and people who have systems and products as well, like ETFs and platforms, to help us at least attain, in the context of sequence risk, because it's a non-ergodic system, the $1 billion that you promised us, Ben, which Lee thinks we can't reliably achieve at the moment, by trying to move to the right of the total returns tail. And we'll do that by interviewing more people like Tom Perfremont, and people who offer platforms for a fee, and we will investigate those fees and whether in the context of those fees, we actually do move to the right of the tail.
Great, nice summary to wrap things up. Thank you very much.